So I did place this trade. I didn't want to miss it, but I can go ahead and walk through the strategy checklist. Coming over here, the first step was to mark out 9:50 and 11:15 a.m. on the chart. You can see here that 9:50 was marked here and 11:15 is marked there. So we can check this off. Wait for an inverse fair value gap to form within this time window. Small gaps count. So there was an overlap here. Zoom in. It was this upper portion of the inverse fair value gap that overlapped. Because I saw that, that was a valid entry for me. And so we could check that off. And then once an inverse fair value gap forms, place a trade with the stop loss covering the entry fair value gap, targeting 2 risk to reward. We see that the trade was placed here. And so it is covering the entry fair value gap here. And I am aiming for 2 risk to reward. So we can check that off. Now we need to observe price. If price disrespects the entry fair value gap by closing above or below it, exit the trade. Or if price reaches 1 risk to reward, move the stop loss to break even. Sorry, my cats are playing in the background. But this is the next step. I'm gonna go ahead and record if either the conditions are met. It's 10:55 a.m. Price is pretty much hovering at the 1 risk to reward mark. I do want to see a stronger close before I move my stop loss to break even, because we see it's hovering here, so it's not really showing strong bullish intention at the moment. I'm going to keep my stop loss here for now until I see that close. But other considerations, looking at the 15-minute chart, we do see that price is approaching a 15-minute bearish fair value gap, or SIBI. And so it's possible that price can come up, react to this fair value gap before pushing downward. And so our take profit is right before the 15-minute SIBI. So we're going to see how price delivers. We see that price has closed above the 1 risk to reward mark. And so because it did close above the mark, I'm going to move my stop loss to break even. So I'm going to do that now for a risk-free trade. And so you can go ahead here and check this off. Now we're just going to see how price delivers. So it's either going to close me out or hit my take profit. So it is 11:12 a.m. It does look like price could stop me out here after moving my stop loss to break even. Just some thoughts. I was reviewing my backtesting results, and I could actually share that later in this video. I noticed that there aren't really many setups. Especially saw this or noticed this last week, where I didn't see a setup for this strategy all week. And it could be because it is only being used on one pair. So maybe if we back tested this on ES or something, it could be more setups there. But I personally only want to trade one pair. So MNQ and then eventually NQ. So I'm not crazy about the fact that this strategy doesn't have many setups. I believe, if I'm remembering correctly, and I'll verify this later in the video, from mid-July to mid-November, there were only 35 trades. And I personally would like a strategy where I can trade every week. Doesn't have to be like a crazy amount of setups every week, but at least 1 or 2 setups a week is what I'd prefer. And there were no setups last week, so I wasn't really crazy about that. So I actually might reconsider this strategy based on this forward test. We also see here that probably going to get stopped out, and it's probably going to come down possibly before coming up. So the price could react to this 15-minute fair value gap here before pushing up and touching this 15-minute bearish fair value gap. But I'm okay getting stopped out. It's a risk-free trade, and it does fit the checklist that I shared. Helps with building discipline, but I am going to revisit the strategy. It's 11:27 a.m. Price did stop me out. Surprisingly, I did win $12, which I'm grateful for, honestly. And so the new balance is $50,016.30. I decided to review the charts and the trade that I took, and as you can see, price did in fact come down to this 15-minute fair value gap before continuing to hit my take profit and then reacting to the bearish fair value gap on the 15-minute chart. So if I did keep my original stop loss, this would have been a winning trade. This trade would have won about $350, but because I moved the stop loss to break even, according to the strategy that I shared, I was stopped out before price went and hit my target. And so just with that, I am definitely going to reconsider the strategy. There were no setups last week. Personally, I'm not comfortable with a strategy that has no setups within a week. I would like to trade a strategy with more setups, especially because I only want to trade one pair. This strategy could be good if you test it on different pairs like ES, but for me, I personally only want to trade one pair, and that's NQ. So I'm going to reevaluate this whole strategy. It's been 2 weeks with this forward test, and yeah, I definitely think some refinements need to be made. I'm going to discuss that later on in this video. did end up changing the original strategy that I shared. I already started forward testing the new strategy, and I'll play the live execution of it in a bit. But before I do, I did want to talk more about why I decided to change the original strategy. And just going over to my notes here, I mentioned earlier that the old strategy had a lower number of setups, and just taking a look at my backtesting notes here, we see from July 16th to November 13th, this strategy had 35 trades or setups that we could take. And I wouldn't say that's a bad number of setups. For me personally, it's bad for the win rate that it is, and the win rate is a 40%. I wouldn't mind if it had 35 trades and the win rate was like a 70%, but a low win rate of 40% is just not worth it to me. And if we think about it, that's 35 trades in about 4 months. This could possibly have a higher number of setups if you use this strategy to trade more than one pair. I personally did not backtest this on any other pair, and I only want to trade one pair for now, which is going to be MNQ to start off, and eventually NQ once I get more comfortable with everything. And so because of the low number of setups, the win rate just not being worth it for me, I wanted to find a new strategy to use. The strategy I ended up going with, I've seen a lot of traders use different variations of it. I put my own spin to it. I set my own rules for this strategy, and it pretty much uses the previous day highs and lows and waits for a sweep of either, and then we enter at a fair value gap that's in line with our bias. You'll see the rules and stuff in live action with the new strategy checklist in a bit, but I just want to come over to the notes regarding the new strategy. So in comparison to the old one, we see that from August 1st to September 30th, which is about 2 months, there were a total of 31 trades with a win rate of 54.84%. So that win rate is if we take one trade per day. I also took a look at the results if we were to take 2 trades per day. And that gave us a total of 46 trades, about the same win rate, about 54.35%. So it's safe to say that this new strategy has a win rate of 54%. When you think about it, the new strategy had 31 trades that we could take in 2 months. The old strategy had 35 trades we could take in 4 months. So this new strategy had about the same number of setups in half the time and a higher win rate at 54% versus 40%. So with that, I am more comfortable using this strategy. Like I mentioned, I've seen traders use different variations of this strategy. I just put my own rules to it. They'll change the windows or they'll enter at any fair value gap. It doesn't matter if there's a bias or not, but I have a bias at mine and I have a set time, and you'll see that in the live execution. And so something I'm going to work on is refining this strategy further to improve that win rate, looking for and identifying high probability trading conditions versus low probability conditions. Just as an example, as I was looking through the back test, one thing I'm considering doing is if I'm going, let's say for example, long and price had swept the previous day low, but during my window, I see that price is approaching the previous day high. Once price approaches and sweeps that previous day high, I will pull out my position altogether. I won't let it hit that 1 to 2 mark, because once price sweeps the previous day high, it's very possible that price can reverse from that point. And vice versa if I was going short. So if I was going short and price sweeps the previous day low during my session, I'll probably just close out the trade once price sweeps the previous day low, because I don't want price to reverse and stop me out of the trade. So that's just an example. I also took a look at the different days of the week. So with this strategy, I'm going to start off with 1 trade per day, just to keep things simple. Looking at the results by days of the week, I did see there was a trend. So this strategy tends to do best on Tuesday, Wednesday, Thursday. Those were the best days for this strategy. Granted, I will say that this isn't the biggest sample size. 31 trades is not huge. It'd be better to have a bigger sample size, but even just seeing these common trends with this strategy, see here that our best days with this strategy are Thursday, Wednesday, and Tuesday. On Thursdays, this had a 78% win rate. On Wednesdays, this strategy had an 80% win rate. And on Tuesday, this strategy had a 67% win rate. And then we see here that the worst days for this strategy were Friday and Monday. So Friday, there were 0 winners. With Monday, 29% of the trades won. So we can see here that there's a clear theme where the beginning and the end of the week, Monday and Friday, tend to do worse with this strategy. And in the middle of the week, Tuesday, Wednesday, Thursday, tend to have the higher number of wins with this strategy. And so that's another thing that I'm going to consider as I improve this strategy and the win rate, is being more cautious on Mondays and Fridays. So maybe on Mondays and Fridays is when I'm going to want to take a step back and look at the hourly to see, is there high or low probability conditions here? Like, for example, maybe I see a potential setup on Monday, but even just zooming out of the 5-minute chart and looking at the hourly and seeing, okay, if price swept the previous day high, for example, did we reach a 1 hour SIBI or bearish fair value gap. That could be a higher probability trade. And that could be one that I consider taking. Otherwise, maybe it's just better to stay out of the market because I know that on Mondays, there's only a 29% chance or about a 30% chance that this strategy could win. It's just things like that that are going through my head. I'm not saying that those are the final results, but this is kind of how I'm going through the data. This is kind of how I'm refining it. I really want to improve the win rate of the strategy as much as I can. It's already starting at a 54% win rate. If I can prioritize higher probability setups, higher probability trading conditions, like certain days of the week, for example, that could increase our win rate in the long run and help us to become profitable. And just as an example here, I actually took the win rate of just Tuesday, Wednesday, and Thursday. So let's say we only decide to use this strategy on Tuesday, Wednesdays, and Thursdays. Again, this is a pretty small sample size of only 20 trades, but the win rate for this strategy on those 3 days specifically, if we just stay out of the market completely on Monday and Friday, the win rate is 75%. 15 out of 20 trades won. And again, here's the note, sample size is small with 20 trades. So this is definitely something I'm going to want to refine and forward test and feel out. But this is kind of how I'm going about refining the strategy and forward testing it. So the next steps here, like I mentioned, is to identify those high and low probability conditions and to continue forward testing this strategy on MNQ. I also want to continue getting used to Top Step. Now that I've gone through the data, kind of showed you how I've been refining it and back testing, I'm going to get into the live execution. I did upload some updated documents in Discord. I've uploaded things like a backtesting template, trading journal template, the new trading plan, and the strategy checklist for the strategy. I'll leave the link in the description, and I'll probably also post it under the community tab. Let me know if you guys can access it okay. But with that being said, let's get into the live execution. November 25th. As I mentioned, I'm going to be using a new strategy due to the lack of setups with the previous one. This is the first day I'm forward testing this new strategy. And so going over the new strategy checklist, the new rules. So the first step is to mark out 9:30 and 11:15 a.m. on the charts. And so we can see here, it's 9:30 and 11:15. They have been marked out, so we can check that. Next step, wait for a sweep of either the previous day high or previous day low. If the previous day high is swept, our bias is bearish. If the previous day low is swept, we are bullish. And so coming back to Top Step, we see here, I marked out the previous day high and low here on the daily chart. Can see that today we swept the previous day high. And so that being said, our bias is bearish today. So coming back over to the checklist, we do see that the previous day high was swept, so we could check that. Next up, wait for a fair value gap to form that is in line with our bias. And this gap should form between 9:30 and 11:15 a.m. Eastern Standard Time. So depending on how the candle closes, this will be a valid fair value gap. Previous day high was swept. We have a bearish SIBI or fair value gap that has formed within our time window of 9:30 and 11:15 a.m. And so depending on how this candle closes, it's going to be a valid setup for me. I'll go ahead and place a trade, a limit order, but I'll be watching price to see if it comes back up to the fair value gap. If it comes pretty close, I'm just going to market order it and cancel the limit order, but we'll see. And so let me go ahead and draw out the fair value gap for you. And the position, what the trade will look like, is a short at the fair value gap. Based on my back test, my stop losses in general were between 30 and 35 points. Most I'll extend it to is 70 points. That's if the fair value gap is pretty big, but I won't exceed 70 points as a stop loss. And so I'll set my stop loss to around 32 points, just be in the middle, and then targeting to R. And so this is the trade that I want to take. So just going back to the checklist, we do have that fair value gap that formed that is in line with our bias. So I'm going to check that. Now I'm going to go ahead and place this limit order here. Limit price 21029, 21029 here. 2 contracts. All right, sell it here. So I've been placing market orders, so I know with that you can just drag the stop loss up and down. This is my first limit order, so still trying to figure out the stop loss. How do can you even set it? I thought you could. Yeah. So I'm going to place my limit order here, but if price gets close enough, I'm probably going to cancel this limit order and just place a market order for 2 contracts. But just talking through my thoughts here, we see that the previous day high was swept and price is currently reacting to a daily fair value gap here. So a daily SIBI, and I can draw that out. It's easier to see. So you can see here, this is a daily fair value gap that price is reacting to after taking the previous day high. Higher time frame points of interest like fair value gaps and order blocks have more weight than lower time frame points of interest. And so because this is a daily fair value gap, I am expecting a strong reaction here, but it is also possible that price can come up and take liquidity up here, because you can see there are high probability, relatively equal highs up here for price to take, pool of liquidity. So it's possible that price can also continue up to take that. But because we're reacting to a higher time frame point of interest, I am more comfortable going bearish. It's also in line with my rules, as you can see with the Excel sheet. I'm going to go ahead and see if this order gets filled. I'll come back with an update. Do see that there is a second entry here. This fair value gap over here that formed, it is also in line with our buys. It's possible that this could be a breakaway gap that price does not return to. And so I am eyeing this here to place a trade. And this is going to be my new position. Stop loss has been extended to 54 points. With that, I'm going to move this limit sell down to this fair value gap. I'm going to see how price plays out. Another thing I forgot to mention, there are also here higher probability, relatively equal lows. And so it is kind of fair game. Where price can go, but just based on my rules, these are valid entries for me. So with this second fair value gap being formed, this is where I'm looking to place the trade. And so again, I move down the limit order to this fair value gap. If anything, if price comes close to it, I'm just going to market order and cancel the limit order. Kind of close to the fair value gap. I don't want to miss out on the trade in the event price comes down. So I'm going to go ahead and drag the stop loss, have it cover the entry fair value gap, and then when I take profit, okay, I'm having a hard time zooming out. Really can't see. Here it is. Trying to target to R. Let me fix it here. Ooh, so I just readjusted everything, but because I did that, it did increase the stop loss to 85.5 points. And I'm just being really transparent, honest. Guess this is how forward testing goes when you're trying to figure things out. So I'm going to have to kind of study Top Step and see how I could keep my stop loss set. Probably let the limit order be filled, but so I was trying to edit the limit order that I placed originally, but it wouldn't let me put anything here. So if anyone could help me figure out how to place a stop loss with a limit order, that'd be great. I know how to do it with the market order, but I thought for some reason I would be able to edit it here. And all right, I'm going to come back if anything significant happens with this trade. Price is coming down, so I do want to move my stop loss to just about the consequent encroachment of the fair value gap. Some considerations. I do want to revisit the management part of this trade because I do think that a big part of being a profitable trader is how you manage. Like, for example, here I'm up $183, and based on my management, maybe I could be selling one contract and take profits. So one thing I made the mistake of doing was being all or nothing. So not taking partials and taking either full wins or full losses, which I think is not what a lot of profitable traders do. They actually take profits along the way. They'll take partial losses. So having a set trade management system or plan, I think, is going to help a lot with being profitable in the long term. And that's something I want to revisit. So I did move that stop loss here. We'll see if price continues to push down or it'll come up. It's something here to know is that price is also reacting to this daily BISI or bullish fair value gap. And so we'll see what happens. Because this is a new strategy, just want to feel it out. But this is the one I plan on sticking with because I'm comfortable with the number of setups and I am comfortable with the win rate. Now it's going to be refining the strategy, forward testing it, and also identifying high probability setups. Because another part of being a profitable trader is knowing when to trade and when not to trade. And so with this strategy, as I'm forward testing it and you guys are following along with me, maybe we could identify some high probability and low probability conditions, so we know when not to trade and when to trade. So those are just my thoughts. I'm going to come back with an update how this trade goes. Before I go, let me just go back to the checklist real quick. Yeah, so once an FEG or fair value gap aligned with our bias forms in this time, place a trade covering the entry fair value gap and targeting 2-to-1 risk to reward. If a second fair value gap forms that is in line with our bias during this time window, add another contract to the position. This was kind of like I mentioned the trade management I wanted to try out. But because I'm still trying to get used to like the limit orders and stuff and market orders and top stuff, I'm going to keep it like this for now with 2 contracts at the second fair value gap for this particular trade. But we can check this off because the trade has been placed targeting 2R. And so, like I said, I'll come back with an update with how this trade ends up playing out. I just realized that I didn't move my take profit, and the risk to reward was actually a 2.43. I just moved it now here. So now the risk to reward is exactly 1 to 2. And the new take profit is $568. See, that price is consolidating around the previous day high. So it looks like price is having a hard time pushing up, but it's also having a hard time pushing down. I feel like it's fair game where price goes. Price can either come up here or it could come down. Price could either use the previous day high as support and push up, or it could break past, but it has been hovering around here. And just some observations, we take the silver bullet window of 10 a.m. to 11 a.m. Eastern Standard Time. You can see this is the 10 a.m. candle, and this is the 11 a.m. candle. We can see there was no fair value gap that formed. So we'll see how it plays out because price has been consolidating here. Do want to bank some profits, and so I might actually end up closing this trade out soon and then just journaling this and taking note, and also going back, looking at my back testing results and refining the strategy further. But yeah, I might actually end up closing this out, but it really depends on how price delivers. See, we got 4 seconds left to close. I think I'm actually just going to close it out for profits here.
Order filled.
All right, see here, gained $36. Just wasn't comfortable holding the trade anymore. And it is pretty much 11:15. This is the end of my trading window. Just going over to the trades, we see that I did close out for a profit of $38. And so I'm cool with that. I don't want to be too greedy in these markets because that's how I was in the Forex challenge. And that definitely not work in my favor. So it's 3:01 p.m. As you can see, price did actually come down and hit my take profit. So if I just move this over, yeah, this trade would have been a winner if I had left it open. Would have won about $530. Close it out. I was okay with that because I wasn't confident in the direction. I didn't like that it wasn't strong momentum. I didn't like that it was consolidating here. Just wanted to share this. And I guess that's the beauty of trading. Make decisions and you got to stick by it. Something I'm working on is not getting greedy. I don't want to feel any type of way for the decision I made because honestly, I don't really want to be watching the charts at 12:45. I kind of want to be done trading by then. Hurts a little bit, I'm not going to lie, but I do stand by it. I want to be content with enough. Just wanted to provide this update. So this strategy looks like it's pretty solid. But yeah.